The real estate sector is back in the spotlight after housing sales registered strong growth in the July-September quarter of 2022. According to ANAROCK data, the sales of residential properties across Delhi NCR, Mumbai metropolitan region, Chennai, Kolkata, Bangalore, Hyderabad and Pune rose 41% year-on-year to 88,234 units. New launches too climbed 45% year-on-year to 93,490 units in these 7 cities during the recently concluded quarter. However, after the pandemic, the sector stands vulnerable to successive rate hikes. Against this backdrop, analysts believe that the upbeat housing demand would override rate hikes in the long run.
So we believe that the real estate sector has done well recently. The demand environment remains strong, and a significant part of the ready inventory is already absorbed by consumers. The current ready inventory in the market is at very comfortable levels, and this has released significant amount of capital for the real estate companies. This bodes well for new project launches by the organized real estate companies, and the real estate stocks thus should do well in the near and medium term. There is some concern in a pocket of the market that the recent rate hikes will have impact on the demand scenario for the sector. We are firmly of the belief that wage growth, the rate of wage growth as well as high employment levels are key factors driving this demand, and some interest rate increase will not have any significant dent on this growth prospects. Some names which we like in this space include Oberoi, Mahindra Life Spaces, Godrej, and DLF. We believe these names should do well going ahead.
Moreover, investors have turned positive on the sector in the second quarter of FY23 after relative underperformance in the previous quarter. At the bourses, shares of Brigade Enterprises, DLF, Godrej Properties, India Bulls Real Estate, Oberoi Realty, Prestige Estates, Phoenix Mills and Shobha have surged up to 28.3%. In comparison, the S&P BSE Sensex and Nifty 50 have gained over 8% each in the July-September quarter. That said, experts fear that incessant rate hikes would inflate costs of raw materials, which would elevate property prices and dampen demand. Anuj Puri of ANAROCK Group says, this whammy of rising rates comes along with the inflationary trends of primary raw materials, including cement, steel, labor, etc., that have recently led to a rise in property prices. These factors will impact residential sales that did reasonably well in the first half of 2022. Since the present interest rate continues to be at lower levels than 10 years ago, more rate hikes carry the potential to derail demand momentum, warn analysts.
As we move from the monsoon season onto the festive season, making large purchases such as cars and homes can be seen as relatively auspicious, and this should increase demand, at least in the near term, especially aided by the sweeteners on offer by developers as they attempt to woo prospective home buyers. Animal spirits are also pretty resilient, and this can be seen and reflected by the Indian stock market, which has remained fairly robust despite the various global macro headwinds. Post-COVID, there's been a pretty decent catalyst in terms of increasing demand for residential homes, especially since space was a premium. People rather sacrifice and swap location for extra space, and this was further aided by the ability to work remotely. The real estate market, of course, is now a little more affordable. Real prices remained relatively flat over the last decade, and while wages have increased, real estate is also seen as a practical and a tangible investment. And lastly, until recently, we've been living in a pretty low interest rate environment. And even with the recent rate hikes, it can be seen as really relatively low compared to 8 to 10 years ago. However, the rate hikes have come, and this will have an impact on the ability as well as sentiment of prospective home buyers. and there may be further ones to come as central bankers look to delicately balance their emphasis on inflation, growth, as well as currency rates. So it's pretty much a case of wait and see to see if there'll be further rate hikes and more costs to home buyers.
As regard today, rupee movement, foreign flows and crude oil prices will guide domestic markets on Thursday. Globally, crude inventory report, US inflation and employment data will be closely tracked.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.